Yo, what's happening, everybody? So, some of you keep posting up comments on Schiff, so I had to do this. I had no choice. You gave me no choice. I think now we have to take a look at, because, you know, he has certain views, and a lot of you are very strongly wedded to those views. Like, you really have embraced them, which is fine. But like, what I try to do here is bring some education, bring some reality. So this is part of that effort on my part. And I think the best way to do this, his company, they've got 5 publicly traded funds that I assume operate under his macro vision. Okay, he's got and I'm going to go through these things, and I have some performance charts that I want to show you. Like, you know, at the end of the day, if you have a macro vision and you set up, you know, investment funds, and you pitch these funds to people with the idea that, you know, my macro vision is correct and this is going to result in exceptional performance, then, you know, that ought to bear out. I mean, if your macro vision is correct, then the performance of those investments should show that, right? I mean, and we know where he stands. He's, you know, a gold bull. The dollar's going to crash. The U.S. stock market's going to crash. We're going to have hyperinflation. It's better to invest abroad. The U.S. is a broken, bankrupt country. I mean, you know the themes. It's not like he just popped up. Like, he's been around for a long time. So, and look, I got his funds right off of his website, EuroPac.com. He's got 5 different publicly traded funds. He's got a emerging market small companies fund. He's got the EuroPac Gold Fund. He's got the EuroPac International Bond Fund. He's got the EuroPac International Dividend Income Fund. And he's got the EuroPac International Value Fund. Okay, all very international. And if you read the web page, his you know, his corporate web page is saying, like, the U.S. terrible policies, terrible monetary and fiscal policies. You know, they're going to inflate away all your money. So fine, we'll take that as his premise. I'm not knocking the guy for having a view. Everyone has a view, but I mean, you know, this. The view should, the performance should substantiate the view, or the view should substantiate the performance if it's legitimate, if it's a correct view, right? So I'm just going to go through them here. I'm going to put up the chart, starting with the emerging market small cap fund. That was his best performer. That the inception was 2010, so 12 years ago. 12 years of performance, it's up 22.9%, 23%. That's his best performer. So 12 years, you made 23%. That comes to 1.9% a year. That's roughly like a 10-year treasury right now. You buy a 10-year, what's a 10-year treasury? It's like 1.8, 1.75, something like that. It's 1.72 today. The next one is the EuroPac Gold Fund. Now, gold is his big thing. You know, he's been pounding the table on gold forever. You know, gold, 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 gold. That's up 2.8%. 2.8%. And this started in 2013, 8 years. So that comes to 0.3% annually. Look, the price of gold in that time, just the price of gold is up 9.3% in that time. So gold itself did 3 times better than what his fund did, which is a gold fund. And by the way, if you had followed, you know, what I said about gold, look, I was contributing to thestreet.com back in 2015 when the Feds first started to raise interest rates and gold was at 1,053 cents an ounce. I said, now you have to buy it. That's up 70% from my initial buy recommendation in gold. But look, this is not about me. I'm not talking about me. The EuroPac International Bond Fund, this started in 2010. This is down 13%. 13% you have lost. And this, you know, I mean, bonds have had a tremendous move, even given where we are right now with the correction in bonds. since 2013. I mean, come on, seriously? The next one is the International Dividend Income Fund. So like he's saying, invest internationally because the U.S. is a basket case, you know, economically, get some dividends in foreign currency, right? That's down 6.9%, and that started in 2014. So he basically, so far, he has two funds that are up. He has that one fund that was up 23% in 12 years. He has the gold fund that was up, 2.9% or something like that. Then he has all the rest are down. EuroPac International Value Fund. This is his last one, the fifth one. That was, the inception is 2010. That's down 4.7%. So that's it. Come on, that's the story. What else is there to say? The guy has a macro view. He's never wavered, although I did point out in a recent video that I did the almost comical flip-flop where he says one day, hey, you know, when the Fed raises interest rates, it's going to push the inflation higher, which is right. I mean, that cost is going to be passed along. That's right. He got that right. But the very next day he said, you know, investors are catching on. They're going to push rates up to pop the bubble in stocks and bonds, but they're not going to push it up enough to stop inflation. So, which one is it? Make up your mind. So that's it, folks. That's the performance. So, like, I don't know what else to tell you. If you want, this is my last video I'm doing on him, but I just, you know, we got to expose the truth here. Got to expose the truth. All right, bye.